Okay.
The first outline. That's what I
How you
can
can
only
see?
see.
Can you see here?
I don't know if are you sharing your trading view?
Yes, I'm sharing my trading view currently.
Yes,
Okay. So in market structure,
I can see it now. Okay.
yeah, in market structure, we have a bullish market and a bearish market. Here, this one is an example of a bullish market or an uptrend series of these high highs and higher lows. This is an higher high. This is a higher low, higher high and the higher low, higher high and the higher low. So this one is a bullish market. Also, we have a bearish market, series of lower lows and lower highs, lower low, lower high, lower low, lower high, and so on. So this one is a bearish market, lower low, lower high, lower low, lower high, lower low, lower. Also, we have a sideways market. We have this series of highs and lows, which are ranging in a certain price range. This one is a bearish market, as you can see here. The price is ranging in this range. Price is moving in a range. So whenever you come across from this kind of market, you can identify this as a consolidation or ranging market. With that, you can see breaking of a structure. Breaking of a structure means that the price breaks. So in this, for an uptrend, in order for each to call the uptrend, the price is breaking this structure previously last higher high. You see, price moving high, creating new high by breaking the previous structure, which was last higher high. Then come to create new lower low and break the previous last higher high, and then moving to the upside, creating new higher high. That's why other also in downtrend, price keeps breaking structure by, we call it a downtrend when you see the market breaks previously lower low structure. This was the lower low structure, market to break. After the break of this lower low structure, we call it a downtrend series of these lower lows and the lower highs. Here we have a downtrend. So how do we know that the market has shifted from this trend, from this uptrend to a downtrend, or from the downtrend to an uptrend? We know the market has a shift from an uptrend to a downtrend. Suppose the market is moving to this lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then market came and break this lower low here. After breaking this lower low, automatically the trend, we say that the trend has a shift from an uptrend to the downtrend. After breaking this previous higher high and the previous lower low, after breaking these previous highs and lows, we consider that the bullish market is over, then we are going to the down trend. This means that we have shift from uptrend to the downtrend. So we expect the market will trace to some point and then proceeding to the downtrend. Also, when the downtrend is over, pricing should break previous highs and lows. These are the previous highs and lows. Market should break these previous highs and lows so that we can say that the trend has shifted from a downtrend to the uptrend. Thereafter, price should be retraced at some point, then continue with the series of highs in the lows, and higher highs and lower low. I mean higher highs and higher low. So now you get the concept, what called the what we call the market to shift from an uptrend to the downtrend, from the downtrend to the uptrend. So after breaking these previous highs and lows, after breaking these previous highs and lows, after breaking these previous highs and lows, then we anticipate or expecting price to retrace. So where will this retracement end? This bullish movement, this retracement end. Oh, sorry. Before coming to this concept, I'm forgetting to tell you that in market movement, we have phases. We have an impulse phase, which is a strong movement. Then we have a correction phase. Impulse, correction. Market always do not move in a straight line. It moves in phases. Yeah, we have impulse and the correction. Impulse, then impulse. So these strong movement are what we call the impulses, and this correction, these are a movement which called the retracement. Market retraces at some point, then continue with its trend with a very strong momentum. So we have impulse, correction, impulse, correction. Also in a downtrend, we have an impulse, correction. I mean impulse, correction, correction. Here we have a correction followed by an impulse. Market always moves in phases. Impulse, correction, impulse, or correction. So let's continue to that subtopic where we have said that trend shift. After price has broken these previous lows and highs, this one, I've said before that we expecting a correction or retracement at some point, then we continue with a bearish trend. So where will this correction end? The question that we, we are supposed to be, we need to ask ourselves, where will this correction end before continuing with the downtrend? So after noticing the pricing has broken these previous highs and lows, then the previous higher high, not this one, the previous one after the last higher high, which is this one, which will be this level over here. Here, at this point, is the point where the market is mostly likely to reverse, or this correction, this corrective move is mostly likely to end at this point, then you continue with the down trend. If you have traded these chart patterns, it's look like a head and shoulder pattern, but it's not the head and shoulder. So this point is what we call an invalidation point. So market after breaking these previous highs and lows, this one, highs and lows, price will make a retracement to this invalidation point or invalidation level to validate it before proceeding with the downtrend. Are you aware up to that? Up to that point? Are we together? Hello? Hello? Can you hear me? Hello, brother. Hello? Hello?
Hello,
Yes, brother.
my network.
Ah, okay. Your network is unstable.
Yeah.
Okay, let's proceed.
Okay.
Up to this point, are we together?
Yeah, we are together. I understand.
Okay. So, as I said previous that
Yeah, we are talking about invalidation.
yeah. We are talking
You
about
said something about invalidation before.
the invalidation point is the point which occurs after price has broken previous highs and lows. After breaking these previous highs and lows,
Okay.
the invalidation point is formed. And this invalidation point is where is it formed? It is formed at this previously after previous last higher high, which is this one. You can see I've marked it with this white ray line. This point is an invalidation point. So let me repeat this example that we say that we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, then higher low. You see, at this point, price has broken these previous highs and lows. This point over here. This point, we have broken these previous highs and lows. So after breaking these previous highs and lows, this is where the invalidation point or invalidation level comes. So which is this one, this point over here, not this one. Price will never retrace at this point. Never place a trade at this point. Once you place your trade at this point, price will never retrace to this point. Maybe price will reverse at this point. This will never happen, my friend. The price will come at the invalidation point, test this invalidation point, then proceed with the down trend. This is this case is for uptrend to the downtrend. So let's see the downtrend. Downtrend to uptrend. So suppose we have this a downtrend. Price is creating series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower high, lower low. Then market come and break these previous highs and lows. These previous highs and lows. After breaking these previous highs and lows, we expect a collection phase. Others say liquidation phase. We expect market to do liquidation or correction. So where will this correction end? This correction will end at the invalidation point. This is the invalidation point where we expect price This is the point where we expect the price to reverse at this invalidation point. So after marking our invalidation point, after breaking previous highs and lows, then we anticipate the price to come to liquidate, do correction, and validate this level before proceeding with our bullish trend. So this point over here is an invalidation point. Invalidation point. This is an invalidation point where we expect the price to retrace, then proceeding with an uptrend. Are we aware up to that point? Are you understand?
Yes, please.
Up to this point, we have discussed about market structure. We have discussed about the break of structure, trend shift, invalidation, and the validation. So let's go to the live chat and see. Let us go to the live chat and see how these levels occur. This is validation point. And you can see over here. Remember, in live chat, we are dealing with the actual price. We're not marking these levels of invalidation or structure break. We are marking the exactly opening or closing price. We are not marking or dealing with these weeks.
Okay.
Yeah, we ignore these weeks. So even marking our structures of higher highs and higher lows, we are using candle body closure. Let me look it at 15 minutes. Okay. Maybe you can see it clear. You can get a good picture of this invalidation. Okay. 4 hours. Let's look at these points of invalidation. Okay. Let us look at this example over here. You see, this one was a trend. The price was moving to this downtrend. Market is creating lower low, lower high. Let me change the picture. Price is creating lower low, lower high. I mean lower high, lower low. Even these, I mean, we count them as lower lows and lower highs. These opposite candles. You will see that lower low, lower high, lower low, lower high, lower low, then market creating higher high, and then lower low, higher high. You see, after breaking here, this one, after breaking this level, this here, this is where the break of structure happened. This was the last highs and lows, lower low, lower high, lower low. Price came and break these previous highs and lows at this point. So after breaking this point, you say that the price, the trend has a shift from a downtrend to an uptrend. So where is our invalidation point? Our invalidation point, this was the point where price has broken the structure. This point. Let me zoom out. This is the point where price has broken the previous highs and lows. After breaking these previous highs and lows, price retraced back to test the invalidation point and then move to the uptrend. So this point, at this point, this was our invalidation point. After breakout, price came back to retrace at this invalidation point, then market proceed with that with an uptrend. Let's find another example, a more clear example. Let's clear example. And this one over here, you see, price was in downtrend. After downtrend, the price came and break these previous highs and lows over here. We had last highs and lows at this point. Let me zoom out very clearly. This was the last highs and lows because price moved, creating lower low, lower high, lower low, then higher high. After creating this, the picture of here is like this one: lower low, lower low, higher high. Price breaks these previous highs and lows, which is this one. After breaking these previous highs and lows, we had an invalidation point. This was the last higher high, which price has broken, and this was the last lower low, previous lower low at this point. You see it. Then after breaking this, the red candle came back and just test our invalidation point and then move to the upside. So if we are about to take this trade, our entry was supposed to be at this invalidation point, and we may have a few pips for stop loss, even 10 pips or 20 pips. That's not bad, or 6 pips. Myself, I usually put 15 pips, 10 to 15 pips as my stop loss, or sometimes depending on my risky appetite. So you can have a few stop loss, but look after testing the invalidation point, price has moved more than 100 pips to the opposite direction. This was an invalidation phase, then the price has moved 300 pips. So if you had put 10 pips stop loss or 15 pips stop loss, means you have a good risk to reward ratio here. The entry, maybe you had an entry over here, a buying trade over here, and then you have 15 pips as a stop loss. Very tight stop loss of 15 pips. connection, internet connection is unstable. You see? So suppose we had this kind of setup over here, our entry was at this point, and then we have 15 pips stop loss, then 300 pips as our target. We may add 20 to 1 risk to reward ratio of this, just a single trade of Euro USD. So let's see another example of this invalidation point. To see more clear these invalidation points, you may change your chart to line chart, because we are using the actual prices, not the weeks. We are not considering the weeks at all. We are using this line chart. So when you come to this line chart, you can see here we have series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. I mean, this was the higher high, higher low, higher high. Then the market broken these previous highs and the lows. After breaking these previous highs and lows, we have an invalidation point. An invalidation point, which was at this level here. This was our invalidation point. Why invalidation point? Because the market breaks these previous highs and lows at this level, at this point. This is where the break of previous highs and lows happen. Then we have this an invalidation point. Then if we change to this candlestick chart pattern, you can see here when price will test this invalidation point. Though it was tested several times, but you see, if our entry was at this point, at this invalidation level, and we have 10 pips or 15 pips as our stop loss, you see, here it is 14, 15 at this point. You see here, our stop loss may not be hit, even if these weeks were very close, 15 pips or 16 pips. Then see, market moved in your favor, in our direction, more than 100 pips, 124 pips, 100. So this is how the market moves. Let's see another example of this invalidation level. These invalidation points, even this point, this invalidation, this one price has come and reacted to it. This one here, over here, you see, we had a series of highs and lows, higher high, higher low. Shit. Over here, we have this higher high, higher low, higher high, higher low, higher high, lower, low. Previous highs and lows have been broken at this point. After breaking this point, then we had this liquidation phase or correction phase, and you come to test the invalidation point, and then boom, price is moving to our side. So let's put the array line at this invalidation point. This was our invalidation point. This is this tool, the magnet tool. This tool helps you to mark the actual price. This was the actual price, the invalidation point. This was our invalidation point. Then if we took this trade, pips, you see, the drawdown was about 4 pips, only 4 pips, 3.7 pips for the drawdown over here. This was the drawdown over here. We have 3.7 pips. Then boom, the market moved to our direction, about more than 100 pips. You see, after testing the invalidation point. This was the movement after the test of this invalidation point, 300 pips in this direction. So this is how the market moves, and this is what we call the price action, the pure price action. Are we together up to that point?
Yes, please.
Yeah. So for today, let's end it at the let's end here. So I give you the homework. You see, even this one was the invalidation point over here. You see, we had higher high,
Okay.
higher low, higher high, higher low, higher high, higher low, higher high, lower low. We broke these previous highs and lows. After that, price came back to test the invalidation, to validate the invalidation point, then move to the downside. See, so this area, this level over here was our invalidation point. So if you are not sure of if the area is higher high or higher low, you can change your chart to the line chart. You see, if you change to line chart, you can see very clear these highs and lows, high and low, high, high, higher, low, invalidation point over here. Then the price came back to test our invalidation point, then move to